Good afternoon, everybody. Welcome to the Trader Merlin Show for your Monday edition. A couple announcements before I dive into today's topic, which was the killer technical indicator. Oh, I always get questions on this one, and there's some good ones that came through today, which I'll dive into. But quick little housekeeping pieces. I will be gone Thursday and Friday, so you guys are going to have to deal with a weekend without me for Thursday and Friday. My apologies, but I'm headed up to Las Vegas, have a little bit of fun. So no show Thursday or Friday. Okay, so today's show, driven by a customer, you guys are all customers, I guess, driven by your questions. And for some reason, I can't find the original email for one of them, but it had to deal with technical indicators. And I thought, okay, I'll start there and kind of build on the show as we go and add on different color commentary about different indicators and kind of explain to everybody what my thought process are as far as what that killer technical indicator is. And of course, this is the T-Rex indicator. I don't know, AI decided to draw a really cool little picture of a digital looking T-Rex on a price chart. So I thought that was kind of fun. Anyway, here's the two questions I want to address. There was a third one, but I didn't get a chance to bring it in here. But Jeff, I paraphrased this one down, Jeff, and I'm pretty sure this was your question. Again, I got many that I just didn't write the names down. Jeff was asking, how do you use something like the MACD where maybe on a weekly time frame it's giving you a buy signal, but on a daily time frame it's giving you a sell signal? And great question. Ultimately, it comes down to the style of trader you are, so I'll address that one. And then the second one was a much easier one, which is from John, which is what's your favorite technical indicator and why? All right. So for those of you who are regulars here, you know the answer to this is it's very simple. And before I get to that, let me explain what my answer would have been back in 1998 when I really got knee-deep in day trading and short-term trading. Back then, I had a lot of different indicators on my screen. Exactly. You're not customers. You're all part of my non-paying family. How about that? You're all part of the family. There we go, period. So back in 1998, I didn't know any better, and I was looking at whatever crutch or shortcut I could get, as many new traders are, right? You're always looking for that fast pass, if you will, to get you to the front of the line and get you to where you're making money consistently in the financial markets. And while it sounds simple and it's easy to point the finger at an indicator and say, oh, I just use MACD or Bollinger Bands or stochastics or shaken oscillator, whatever it is, it's easy to think that some off-the-shelf, readily available indicator is the holy grail, because there are so many people out there that make you believe that their indicator is, in fact, the holy grail, and they use it better than anybody else, and they're the one who's making tons and tons of money off of it. So there was one guy I met, which honestly, it felt like a Jonestown, Kool-Aid drinking batch of people, which was... I think it was called Woody CCI. You guys can probably Google his name, but please don't fall for this. This guy uses CCI, and it is a very simple tool. We won't go into the calculations, but this guy convinced everybody that his Woody's version of the CCI was the goose that laid the golden egg. I mean, you just put on a chart and cha-ching, you'll just see money just flying into your accounts. And I watched this many times at trade shows, and it frustrated me because most people at trade shows are snake oil salesmen. They're telling you what you want to hear. They're trying to get you to buy their services. And I'll be honest, it really bothers me, these trade shows. For the most part, I think people have an ulterior motive to go there. With that gratuitous plug about my appearance at the trade show, I'll be in Vegas on the 15th of July giving a presentation, but I'm not selling anything. I'm giving information, and if someone wants to sign up for our cryptocurrency and digital assets program, that's totally fine and on you, but I'm going to be giving out just pure educational content for 2 hours. If you do go to the Money Show and sign up for this one, use code 065234. For me, it's just about getting out there, visibility, and enjoying it. However, there are people that spend tens of thousands of dollars to go and set up at these shows to get a speaking engagement and then just sell your service. I was invited by Money Show. I'm not paying anything to go. So mine's free, and Money Show likes to invite me up there because I'm not selling anything, right? I'm giving out education and trying to help people succeed. So this snake oil salesman, and there was many of them, will continue to tell you that their indicator works, and it's easy to prove that your indicator works. So for example, you guys could type in the first indicator that comes to mind, whichever one is the first one. Type in an indicator in your chat box here. Just curious what you guys think. Because I can, okay, so Glenn was first with the RSI. I can, at any moment in time, take RSI, run it through different software, and back test that software and show you a winning readout. I can show you, see, if you use my RSI strategy on this one, it would have worked. So what these guys will do is they will take multiple accounts. Most of them are not showing you real money anyway. It's all simulated money. But the real smart ones will take, let's say, 3 or 4 accounts, and they'll put in $50,000 in each one, and they'll run different variations of that strategy until one of those accounts shows an above average rate of return. And then they'll take those statistics and go, hey, look, I'm making money with my Merlin RSI strategy. You've got to use this. This is the answer here. But by the way, my software is $1,500 a month. And you're like, oh, well, that's nothing. I saw the profit. That's the norm. What they don't show you is those other accounts probably lost money more than what they made in the winning account. So, yeah, Margaret, the red light, green light system, Wise Trade, I think was what that one was called. And, they sold you on this whole concept of buy this indicator. You didn't even buy the indicator. You buy their box. You pay for their software. And you buy that software, monthly fee. It's expensive. And they just give you red lights and green lights, right? That's nice. I mean, it'd be nice to have it be that simple. What you don't know is that moving average system with Wise Trade was a combination of moving averages and volume. And if you just understood moving averages and volume, you save yourself a lot of money and didn't need their red light, green light. Where do we get more information? I don't have the link there. I should probably, Irvin, have the link to put into chat since I should be promoting my session. But I'll put that in there in just a second. Right? I'm going to do multitasking here while I pull up the email from them that gives me the link for the session. Here you go. I think that this is the direct link to it. Let's go. There you go. So there you go, Irvin. And for those that are coming to that presentation, I'm doing my presentation from 10 to 10 or 10:30 to 12:30 on that Tuesday, and I think I have like a 6 o'clock flight. So maybe we can go and grab lunch or a drink after that. Probably grab a drink after that. Be more than happy to hang out with you guys. So even follow the red light, green light on the road. I like that, Steve. That's really good. I didn't even follow the red light, green light on the road when driving. Oh, that's good. So let me answer John's question first, which is, what's your favorite technical indicator and why? The answer is very simple. I don't have a technical indicator. As I saw come through in the chat here a little while ago, price is the answer. Every indicator that you're going to look at, I don't care which one it is derived from some combination of price and time or just specific transactions or being tallied and tabulated. Things like on-balance volume. For me, in the early days, I wanted the shortcut. And I had at one moment in time, I had so many lines on my chart because, remember, I was on a big trading floor with like 100 and I think there's actually a picture of it here. I was downloading this today for a presentation I'm making. Let me see if I can show it to you guys because some of you may have never seen this if you're not from Online Trading Academy or Trading Academy since we dropped the online. Let me see. Where is that bad boy? Oh, I guess it didn't have it on this computer. Oh, here it is. So this is a picture of the old trading floor. This, if you go to the Trading Academy centers, you'll see this pretty much everywhere. It's in all the different centers. And this is a long time ago, man. This is 1990. It's actually 1998. So we started in 1997, but I got there in 1998. And yeah, if you're careful, you can actually spot me in this picture. That's me, little old guy over here. I was in my early 20s. I guess I was 25 at the time, and I had a full head of hair. It wasn't gray. I didn't have wrinkles. Oh, the perils of getting older and older and older. Anyway, so this was the old trading floor back in the day, and I would gravitate towards traders. There's actually one guy two traders on the screen that were noteworthy. One guy is right here. They call him Rocket Ray. Hey, Margaret, what are you saying? I plumped up a little bit? That's not nice. and this guy right here, this guy's name was Adam. Adam was actually featured on ABC World News Tonight. And they came onto the trading floor one day. It was pretty cool. They came on the trading floor with all their cameras, and they sat right behind him because Adam was having one of those days where we were like, Holy cow. This kid was 24 years old. So he was right around my age, so we kind of resonated. And that day, he was up $60,000. It's all recorded live on ABC World News Tonight. You can actually pull it up. They talked about the day trading revolution. And again, this to me is the epitome of trading information and news. On that day, let's imagine you guys are all watching ABC World News Tonight. And a story comes on about this 24-year-old kid who, while the camera's rolling, is up $60,000 in profit. What would be your mindset? Like, what are you thinking in your head? Most of you probably like, where do I sign up? Right? This was the greatest marketing that ever happened to this trading floor because people saw that and were like, holy cow, this kid just made 60 grand on camera. I want to do that. So our phones lit up like crazy. Everybody and their mother wanted to come down and be a trader on this floor. What they don't show you is that was like a Monday morning, he made $60,000. And then on Tuesday, he lost 30. Wednesday, he lost 25. By the end of the week, he was down like $50,000. But the media only captured that good story, which to me is the story of most traders' existence. They'll talk about the winners and just kind of conveniently forget about those losses. It wasn't once in a lifetime, Lewis. He had big swings. So as you should learn from other people, right? This trading floor, this graphic you see here, had some great traders, but the most of them were garbage traders. Emotional, indecisive, hopium, and Adam was an incredibly fast, intelligent kid. He was really smart, but he had serious emotional issues. And if he was angry, and him and his girlfriend used to fight a lot. It was funny. We got to the point where we would go, Adam, are you fighting with your girlfriend? He'd be like, yeah, why? Go home, bro. You're going to lose all your money today. And if he was on an emotional roller coaster, that's usually when he would lose money. When he came in calm, focused, and everything was great, this guy would crush it. So I learned a lot about controlling emotions, behavioral analysis. What was it, the cocaine? It could have been. There was one guy, he actually sat back here next to me. I'll leave his name out of it, but he came in one day and he was on LSD. And he was trading while on acid. And if you know what these computer screens look like, the direct access trading platforms, it's all these kaleidoscopes of colors moving and level 2 screens. And I look over and this guy's just, eyes are rolling back in his head. I'm like, bro, you want me to get you out of this trade? Because you're losing money right now and you should probably go home. He's like, yeah, okay. So and you joke about the cocaine. There was definitely some stuff going on that floor. Good times. It's funny. I'm blessed that I can go back and look at this and say, not only did I survive this, but I came out of it armed with all of the collective knowledge of all these people. So, Margaret, want to know who's this guy? You talking the Oriental guy on the left-hand side? That's Ayal Shahar. He is the one that started the Trading Academy. But this guy right here, Trey Lazera, awesome. Trey Lazera he runs TP Futures, and he now is part of Trader. So Trader's Futures division goes through his company. John O'Donnell is not on this floor. Here's Mike McMahon. I actually think John O'Donnell might be back here. You can always tell by his bald head. But yeah, it was just a good time. It was a window in time. And by the way, we started this thing called the STC, which is the Strategic Trading Center. And maybe if I can find some pictures. On the left-hand side of the screen, there was another room behind everybody that had two people in it. One was Kevin Green, and the other guy's name was David Jonty. And these two basically did market calls. So they had this huge, army of monitors and data sources, and they were reading, hey, here's what's going on here, here's what's going on here, and letting everybody know kind of things to watch in the market, kind of like our XLTs at Trading Academy, and that's what those headsets are. Those headsets are people connected to that initial kind of stock market room, which is pretty cool. Anyway, I don't know why I spent so much time going over this. Looks like you were hitting on the gal next to you. I was. Yes. She. You can't see her. She was a very attractive young lady, but yes, I was hitting on her. Sure. So there you go. Now you got your answer there, Big Ab. So the reason I brought this picture up is there were people on that floor that I knew were good traders because I could walk by them and see their screens. So on the upper right-hand corner of a lot of these screens, there was a P&L button, and you can actually turn it on or off. And if it was off, you knew they were losing money. If they were making money, it was on, and you could see it. It's just the nature of the beast, right? People they're embarrassed about their losses, but if they're winning, they're like, yeah, look over my shoulder, check me out. And so I started to learn who were the really good people. I started to learn the good, the bad, the ugly. I started to learn what tools are working. And many of them were using different indicators. So like the guy would sit next to me. One guy's name was Tibor. Tibor would always be like, you got to use moving averages. And he just kept pushing and pushing. So, okay, I use moving averages. And mind you, I was new at this time. Another guy across the way, his name was Eric. Oh man, I could look that guy up. And Eric was the most loud, boisterous person in that whole trading room. He would scream and yell all the time. And he was all about stochastics. So he's pushing stochastics on me, telling me how to use it. Next thing you know, I had 5 or 6 different indicators on my screen. I've got Bollinger Bands and MACD. I've got volume indicators and unbalanced volume. And I finally just got confused with it all because one signal's telling me one thing, one's telling me another. And ultimately, I just realized I'm trading price. So what are all these indicators doing to help me? So I started to remove them one by one. But before I took them off, I made sure that I understood what does this indicator specifically tell me? What is it saying, right? So when I look at a Bollinger Band or MACD, I know in my head how it's calculated, and then I can go back to my price chart over here and say, look, if I add a moving average onto this chart, what's it going to tell me? I mean, everybody could look at this chart right here. If I just pulled up SMCI, if you put a moving average on here, we all should know what it's going to do. Now, depending on which time frame, right? So moving average is most likely going to be going sideways because SMCI has been sideways since March of this year. Granted, it's moved a little, but it's still relatively sideways. So once you learn how those moving averages are going to look, here's a 200-period moving average, totally sideways. If I put Bollinger Bands on here, I don't need to put Bollinger Bands because I know it's right in the middle of the Bollinger Bands, actually slightly near the bottom because it's slowly trending down, but it's nothing extreme, right? So, I was wrong, a little bit wrong. It is right in the middle. So learn what those indicators are. That's the best indicator, is when you look at price, in a nanosecond, your head goes, okay, I know it's going to be overbought on stochastics, Bollinger, RSI. I know it might be giving me a buy signal on MACD, but don't have it on your screen because you'll start to trade off of those indicators and make that your decision tool, whereas price should be the decision tool. Was there a limit on how much they could lose in a single day? No. And that was scary. So, Stephen, I watched a guy, he was actually up in the front window, really nice Indian guy, just a really nice guy. There was a day where it was Qualcomm. Qualcomm in like 1997 moved up intraday over 100 points. 100 points straight up intraday. Let me see if I can bring up QCOM and go back that far. How far back can I go here? This might take me a while, folks, but let me see if I can pull it up because it's definitely split adjusted now. But if you go back into 1997, this thing moved. It was wild. Oh, maybe it was after that. It was probably right here. It's all split adjusted, by the way. It was this gap and run. So it must have been this day here. It moved up like 100 points. This is probably November 3rd, 1999 is probably the day that this guy just remembers in infamy. So what happened was he was on Qualcomm and had big news. I mean, obviously a phenomenal looking chart. It gapped up 100 points and the guy started shorting it because, it can't go up any higher. It's up 100 points. No way, it's garbage. And he shorted 1,000 shares. And as it continued to rally, he shorted another 1,000 shares. And it went into the close. So here he is in a massive losing position going into the close. He should have just closed out, licked his wounds, and moved on. He shorted another 1,000 shares going into the close, so he's 3,000 shares short of a stock that just moved up 100% in a day. And it gapped up 20% the next day, and as you can see on this price chart, I sat next to him the next day, and I watched him come in, and he sat down at his computer and just he just stared at his monitor in disbelief. I mean, it was kind of sad because he was just kind of like this. And he kind of looked down, didn't really know what to do, and he just got up and walked out the door, and I never saw the guy again. He blew his entire account and more. Lost more money than he had because margin calls and he was over-leveraged on it. So I've seen people throw monitors around this room, losing $50,000, $60,000, $70,000 in a snap of a fingers on a bad drug deal announcement. It's bad. What platform? This was CyberTrader. CyberTrader was awesome, but it got bought by Schwab and then scuttled. Schwab ruined CyberTrader, unfortunately. So to the question, which was, what's the best indicator? The best indicator is price. There is nothing else. Do not let anybody convince you that their indicator is better than price, because you're not trading the indicator. You're making money off of price. And if you boil it down to its simplest, it doesn't matter what symbol it is. You're basically saying, I think this is going to go higher or lower based off of what price has done in the past. Now, indicators can certainly clue you into changes. Yeah, Stephen, everybody here was trading their own money. Yeah, this was not a prop firm. This was, you brought your own money in. And the reason people went to this trading floor was because it was one of the first places where you had high-speed connections. So they had a T1 line, which the techies know. Back then, it was a really, 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 really powerful line to get, high-speed internet. Well, because at home, I was using 28K baud modems, right? Everybody knows this, that, the connecting thing. So they came down here for a T1 line, which was the big daddy. You can't see in this picture, but off to the left as well, there's another room that was the biggest rat nest of cables I think I've ever seen in my life. Nowadays, you guys can get stuff that's faster than a T1 line through Time Warner or Cox or whatever, straight to your home. So people went here because if you wanted access to fast market data and to day trade, there's no way you could have done it at home. It was almost impossible. Yeah, AOL, right? You've got mail. 1994, I wanted a T2 line in my office. Yeah, back then, that was the cutting edge stuff, right? It's crazy. It kept getting faster and faster and faster. Absolutely, Tofi. Your phone is way faster than most connections today. So this is why people came here. But you had to have a $30,000 account minimum. And here's the thing. These seats, so you only had a single 21-inch CRT monitor. Some of us had doubles, so back here in the back glass area, these were the double monitors. So I was just helping out the cute girl, but my desk was back here, and I had two 21-inch CRT monitors, which is probably why my eyes suck so bad today. But the rules were you had an assigned seat if you did more than 20 transactions per day. Now, depending on, I think the very first, when I first started, it was like $20 a transaction. So I'd have to spend $400 a day in transaction costs just to reserve my seat. $400 per day. That's tough. Your goal is to make, let's say, $500 per day, and maybe I get to my $500 per day target, but I paid 400 commissions. I'm like, I made $100. Woo! I agree, Oliver. I don't think there's any way to work with one monitor now. I can't go back. I'm 2 monitors minimum. I feel like I'm suffocating with one monitor screen. Like when I'm traveling with my laptop, I can't do it. I need 2. I love 3. This setup here is perfect. I got 3 monitors, so everyone's got their own little thing. $400 back then was sky high permission. Chad, $20 per transaction, and we negotiated down. So I think I've mentioned before, commissions are free, Steven. Stock commissions are 0 now for most brokerage firms. So back then, I was averaging 550 trades per day. Adam, over 1,000. There was another kid, Jason, who his all-time record was like 36 or 3,800 transactions in one day. You can imagine, what his commission bill was. So we would negotiate down with the guy who owned the floor, and he was always so friendly and buy us lunch every Friday because we were making him tens of thousands of dollars a week just in commissions. A day. At least I used to have to pay $14.95 for a trade in the 80s and 90s. Yep. Yeah. Oh, the times are changing. Maybe one day I'll bring on Kevin Green and who else can I bring from here? Well, we got Mike McMahon, who some of you might recognize. Who else is here as an instructor? Just me. Oh, this guy was pretty good too. It was a Greek guy. Oh, God, I forgot his name. Really fun. Anyway, most of these people are all gone now, or at least gone from, I don't know them. Bring on the cute girl. I don't know where she is anymore. I think this is John over here with the bald head in the corner. You can't see his face. So what was I doing? I was actually helping her. She was a trader who was struggling, and I was just happened to be sitting right there giving her some pointers and showing her how stuff worked. This was not my seat. Normally I don't sit here, but back then I was the hot guy. Not as an attractive, but I was like the guy who was doing really well, and I was popular on the trading floor. Everyone wanted to befriend me because at the end of the day, you look at the trading floor and you're like, well, who's making money? And there were probably a dozen or so that were making money. And people always wanted to kind of break into your little clique, your little group. We had a small clique of people who were doing it really well. So I started buying whole for $6 a trade a long time ago. Who's the guy on the right? You talking this dude? I don't remember who this guy was. He was support. There was a bunch of tech people. Oh, sorry. You mean this guy right here? He was tech support. I don't remember what his name was. There were a few tech guys. You were using risk management, and not a lot of that were back then. Yeah. You know, I think I might have mentioned this, but it really came down to a mentor of mine who's not on this floor and on this picture. And I had gone on a losing streak, and basically, and to make a long story short, he just kind of verbally assaulted me and called me every name in the book and said, listen, you're going to blow your account so quick. Stop. You're being an idiot. You know, you think you're smart. You think you're better in the market because you just got out of college and you got a finance degree. He's like, this market will kick your butt up and down the street until you finally submit and admit that the market is stronger than you. The market's more powerful, and the market's going to do whatever the hell it wants to do, with or without you. So just be humble and be the little mosquito that follows along the elephant through the forest and, you know, don't get trampled. Just be careful, always protect yourself. And to me, that's stuck in my head, and I hope it sticks with a lot of you as well, is sometimes we want to impart our will on the market and, it's got to do this, it has to. No, it doesn't. It's going to do only what it wants to do. That's it. Let's see. Most minis order contracts I made in the day was about 200 plus. Wow, Chad, that's quite a bit. Oh, plus all my cancellation orders, yeah. We used to get charged 25 cents for each canceled order. So you're like, wait, what's this $75 charge? Like, I didn't cancel that many? Yeah, we did. My broker called me and told me it was my limit for high frequency trading. Ha, funny. No, John wasn't a mentor. So John wasn't an active trader. He's more of an investor guy, right? He does the longer term stuff. And when you think about it, now let's be honest, I don't think you can say you have one mentor. I had a lot of people, even Adam here, who I don't believe trades today. I don't think he's doing that well today, but I would argue that he was a mentor in the sense of I learned the ropes of high-speed trading. Like, this guy could send out 50 orders faster than you could send out one. I'm not joking. This guy could send out 50 orders by the time you could go through the process and send out one, because it was all hotkeys. He'd just go, bah, 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 and just hit that thing 15, 20, 30 times, and you're going, what's he doing? He knew exactly what each key did. It was a buy at the ask, sell at the bid, limit orders market. He had them all customized, and that taught me how to do customized keys. So, I learned that. And I also learned that trading high speed is usually a losing proposition because you're racking up so much in commission costs, right? You're just churning your account. So I went from frontline infantry back to what I would call being a sniper. I really think that my approach today is much less stress, much more of a sniper approach. Like, I'd rather be in that watchtower where nobody sees you, and I got a few bullets in my gun, and I take calculated shots, right? Back then, something was moving, you just hit F4. F4 was buy 1,000 shares at market. Boom, up F4, another 1,000. I was still going up, another 1,000. Right, so I just bought 3,000 shares at market before you even knew what happened. It was crazy stuff. Anyway, we've digressed into a walk down memory lane here today on Trader Merlin Show. But I like it. That's what makes it fun. Total. Big Eb, I would argue I am definitely a sniper now. I would rather make no trades than make 500 trades and hope I made something, right? They're two completely different personalities. I'd make 550 trades in a day, and at the end, I'm like, I hope something fell out of that and made profit. Whereas I'm going to look, and if I don't see anything worth taking, I'm not going to take a shot. Today was a good example. So I took about an $800 loss today on the S&P futures. Based off my rules, I was going on a break of the intraday high for the S&P. I don't remember the number off the top of my head. Went long 2 contracts. I set a stop loss based off the ATR, which at the time was like 6.5. So I did a 7-point stop loss on that one. Boom, came down, took me out for both of them, and then proceeded to rally. I'll show you. So today's trade, it sucks. I don't like losing. No one here does. Let me go back to what happened here. Let's go today. Oh, technician, that's a great question. How do you get over leaving money on the table? All right, so let me real quick so I had a pretty simple alert on today. And I set my alert right before we got to this high. But the high point here, as you can see, was 59.17 3/4. So I set an alert at that price. I ended up getting long at 59.18 and you can see it went up for another 5 minutes and then started to drift back down. So what did I do? Well, I went in, I looked at the ATR, checked out the average range, what it was moving. It was right around 6.5, I think. So I put a 7-point stop loss on it. It came down, took me out, and then proceeded to do that the rest of the day, which is just one of those, you're like, son of a biscuit. It did what I thought it was going to do. I just had my stop too tight. You know, as frustrating as it is, because no one wants to lose $800 on a trade, I don't care. It is what it is, right? It's just part of doing business, and I'm going to get stopped out sometimes. Next time, I'll do it exactly the same way, and if it might work, it might not, but the probability is higher. I was just going with the trend. I was going with the trend and breakout trade here. So that's really what I was looking for. I didn't see anything bad over the weekend that kind of, looked bad. So I was just kind of an optimistic state. Was surprised to see the big swings here on the open. So I just set my high up, breakout high of the day. Let's even say, if you don't leave money on the table, you'll end up losing most times, in my opinion. I'll never be the last buyer, exactly. You will, I'm not going to say never, but you will very rarely sell the dead low, you very rarely buy the dead low and sell the dead high. I've done it, and you're like, you just turn to whoever's around, you're like, damn, did you see that? I'm the highest price. You should be over the moon if you sell the dead high of something. Leaving money on the table, that's fine. Think of it like a tip, right? When you get your bill for $100 at the restaurant, you're going to walk away with just 100. You're in for a little bit extra, just a little tip. Leave a little bit extra there. And to me, you're absolutely going to leave money on the table. And how do you deal with it? You just have to tell yourself it's part of doing business, right? Literally, without exaggeration, it's probably tens of thousands of trades I've made where I've gotten out at my target. Let's say, my target was 10 points on the S&P. So I get to 10 points, I close out my position, and then you look at the next day and it's up another 50 points. You're like, oh, why didn't I just leave it? I followed my plan. I followed my rules. I can't get upset about that. Maybe what I can learn from it is, how do I shift myself to trade the bigger picture, right? Because you were probably going shorter term. Maybe I look at the bigger trend, which brings me back to our discussion, since I've gone on this crazy rabbit hole today of walk down memory lane. But I can't forget Jeff's question about MACD. So let's talk about that for a second here. I'm going to go back to the daily here. I'll go to SPY just because it's a lot less markings on it. I'll take all my markings off here so we don't have clutter here. 27 drawings. And I'm going to add on one. Let's get rid of this moving average. We're going to add on MACD. So first off, before you guys Google this and look for MACD, do you know what MACD is? How is MACD made? Can you guys tell me? How is MACD made? What is it made of, right? Because remember, I'm putting this indicator on my price chart that's supposed to tell me what's going on with price. And here it is down at the bottom. So you can see right now, MACD is looking great. It's got it moving up aggressively, flatlining right now, but been on a pretty nice uptrend. But what is it calculating? All right, good one, retired Jim. That's good. Don't look it up, Glenn. I'm going to tell you right now. Because the MACD is comprised of two moving averages. It takes a 20, oh my gosh. I know this like the back of my hand, and I just absolutely had it's a 26 period moving average. So it takes a 26 period moving average, and then it takes a 12. So it's taking a medium time frame, right? 26 days, or periods. In this case, we'll use the days. It's taking 26 days and creating a moving average for that. And it says that's the intermediate term. Then it's taking a 12 period moving average as well. So it's got two lines. And all it's showing you is the 12 moving up relative to the 26, meaning is the short-term sentiment bullish or bearish? That's all it is really designed to do. So if you look at this chart here, let's go back a couple of days. And you can see we've got two lines at the bottom, right? You've got, I think that's an orange line sloping down, kind of going flat. And then you have a blue line that's somewhat jagged. And you can see that the blue line is now getting closer to the 26. that means that over the last 12 periods, price has been rather bullish, whereas the 26 is not bullish. And therefore, you might get a slight change in sentiment. And Big Eb says it's a difference between the 12 and the 26. It's actually not the difference per se. That's the histogram. So the histogram represents a difference between these two. Let's go back to something we don't see, like right here. Okay. This daily S&P chart here. You've got price trending down fairly aggressively, right? We can see that. Obviously, we all know that you should be short here because the trend is your friend till the bend at the end. And what happens is the MACD at this moment in time at the bottom just simply acts as decision support, right? You can tell that the 12 is actually pulling away from the 26. The gap's getting bigger, which tells you momentum is aggressive short-term down. But then we move forward a couple candles here. And you guys can see, I know it's hard to read that bottom chart. Let me make it bigger. There you go. You guys notice now on the bottom chart that the MACD is changed. That blue line is now ticked and started to curl to the upside. And that's telling you that over the short term, prices are starting to slow down. The descent, the free fall there is slowing down. So if you are short, this is an early warning sign that, you know what, prices have stalled. And because it's so extended, it's really oversold here, really, this might be an opportunity for you to close your long position, right? Yes, you subtract, I forget which way you subtract. I think it's the 12 from the 26. So yeah, this gap here is showing you the percentage. No, see, now I'm getting the technical side is eluding me. All I use it for is saying it is showing you much faster change in the 12 versus 26. The histogram, I believe, is representing the gap, the space between those. That's the bar chart you see here, the above and below the zero line. That's your histogram. So one more candle forward, you can see now the blue line is starting to get closer. It's pinching and pinching and pinching. At this point here, a lot of traders will say, when the 12 crosses above the 26, that's your buy signal. If it's in an oversold situation. So you can see here, it's been trending down for a long time. MACD just crossed above its 26 period moving average. A lot of traders will look at that as the buy point. Okay, so let's put a line right there and tell you, when I say buy point, it's cover your position. And I'll put that on the next candle, which is right there. Okay, so it told you to cover your short position there. Now, I, for one, probably would have waited. And I would have waited just because I want to see this thing make a new high. So for me, I'm not looking at the the MACD. I'm looking at price. And I'd be looking at that high point right there at 570.95, right? Basically saying, okay, it's kind of hesitating here, going sideways. If it breaks this, then there's definitely buying pressure. I'll exit. So technically, the MACD would have gotten you out a little bit earlier of your short position here than mine. Normally, that's not the case. Normally, an indicator is lagging, and you'll be in late when those crossovers happen like that. So that's your MACD. Now, the question from Jeff was different. The question from Jeff was, when I look at something on a weekly time frame, I don't know, I didn't have time to go find an example of this, Jeff. Okay, well, I wish I could just do it without. Let's do it all the way to right here, which will be March 1st. All right, let's do it March 1st. So if we add the MACD on this one, which down here at the bottom, I will add on the MACD, we can see that it's well above zero. Zero line is down here. And what this means is it's been on such an incredibly strong uptrend. I mean, this thing has been above zero, really giving you a buying opportunity. Your last buying opportunity when it crossed above the zero line was back in March of 2023 on the weekly. Man, that's phenomenal. Phenomenal. If we go back to March 1st, which is right there, you know, it actually told you to go short or get out of your long position back on December of 2024. So the point I'm making here is the moving average here, or the MACD, was actually flashing you a sell signal back in December. And in hindsight, it would have worked. Of course, I hate hindsight. If we add on the daily time frame, it's going to tell us something different. Let's go what we said to March 1st. So notice the daily time frame is giving you all sorts of different signals. You had a sell signal back here on December 11th, and then told you to cover that position back here on January 16th. That would have been a small little winner. So you're getting much faster signals here on something like a MACD. Now, to answer Jeff's question without confusing us more, you asked, what do you do if the weekly is telling you that to stay long, but the daily is telling you to go short? Ultimately, it boils down to a very simple thing. What's your trading objective? I can't make it any simpler. If you're someone who's like in your 401ks and your IRAs and you made your plan off the long term, then stay with the weekly. If you're someone who's a swing trader, maybe a little bit shorter term, then dailies. If you're someone who's a day trader, then you're using hourlies and 15s and 5s, right? So the time frame is the real dictator here of how you want to use that indicator, whether it's Bollinger's or Stochastics, whatever. So that's my perspective of it, Jeff, would be it ultimately boils down to what your trading preference is. I know my style. I'm really a swing trader. I don't like long-term position trading. We've got a bunch of Bob Dunn fans in here, and I'm a big fan as well. Bob would be, the weekly was his moneymaker. That was his big power time frame, was the weekly. I like to look at it just to gain perspective of the big trends. And if I see the weekly really setting up for a sell-off, of course, that makes me a little bit more bearish because I'm looking at the daily. I would argue that the daily for me is probably my highest time frame. I start every chart, every day with the daily. And then I work my way down to the shorter time frames to find specific entries. So there we go. Let's see, what was the original? The killer indicator doesn't exist. That's not Larry. The killer indicator is price itself. Remember, it's what you're trading. Your trading price, therefore the only thing that matters is price. I saw a question here, do I trade VWAP, volume weighted average price? No, I don't, but I do think it could be useful, right? VWAP shows you at what price levels most of the volume transacted at. But Chris, to be fair, if you're using VWAP, you're using something that's derived from all the transactions that have happened. I'm using supply and demand methodology, which is something that we teach at Trading Academy, and I'm basically coming up with the same thing. However, with VWAP, you're looking at actual physical transactions. For supply and demand, you're looking at how did price leave levels, how did it return to levels, and assuming that there's big buying and selling pressure at specific areas. And VWAP could help you. I think that if you use something like VWAP in conjunction with supply and demand and those things line up, then that adds more value to your trade. Again, technical indicators should just be a complementary piece. Your decision should be made off price, but then you can go back and say, what is this different indicator telling me? Should I go long, stay short, whatever, and use that as a decision support tool. Ultimately, the real successful traders I know, they don't use indicators. They can look at any price chart and tell you with, I would say probably an 80% accuracy, maybe 90, exactly what that indicator is telling you, right? Okay, man, that was a lot. So John and Jeff, there you go. Now, I did get a question on crude oil today, so I'm going to try to go in here. That went a little bit longer than I thought it was going to go. I thought that would be like a 10-minute quick answer, but we went down a deeper rabbit hole. It was fun. OPEC. You look at what happened with oil today. We had oil, great day. And we've mapped this out kind of as having an inverse head and shoulders pattern. And to me, it's kind of a conundrum. Do you respect the bigger downtrend here or the shorter-term trend sentiment change, which looks to be moving to the upside? And one of the main reasons for this abrupt change is OPEC reiterating that they're going to increase production, but they're going to keep it at, I do believe that through July, they're going to keep it at 410,000 barrel increase. So bumping up 411,000 barrels. And why did we spike like this? Or why did all of a sudden, markets look good here? Well, OPEC obviously increasing production. The more they increase production, that should cause price to sell off, right? Because more supply would push prices down. The markets were expecting more production, more increased production, that they're going to kind of flood the market with oil. And OPEC said, no, we're going to stay the course right here, and we'll keep it at 411,000. So that added an error of predictability that based off of the traders' analysis, that supply doesn't equal the current demand. demand being a bit more than that current supply. Therefore, prices had a nice spike. You saw 2.85%. At one point, it was up over 3, almost 4%. The big question now is, do we break this and break that trend line? And we're right at kind of a very interesting, I don't say inflection point here on crude oil, but that's a big part of it, is OPEC keeping their inventory or production numbers at 411,000 barrels, new barrels. Therefore, more supply, but that's less than what the markets are anticipating. So, Merlin, what's the deal with the oil refineries closing when OPEC says they want to produce more? You talking in the U.S.? I saw something today, and I didn't get a chance to dig into it, looking at how we're seeing more rigs go offline in the U.S. And I do think that that might be going back to what John Rowland was talking about, which is if price is under, he said 60 to 65 bucks a barrel, I believe was the number he'd used on the show last time we talked. He said that's production cost. And right now we're at 62, which is they're barely making money. Stop producing. That's my belief, is that they're kind of slowing things down. Steve, that's 411,000 per day at new barrels being produced. Yeah, we obviously use a ton of oil, and that's above and beyond what they were already producing. So increasing their existing production by 411,000. So yeah, they're producing millions of barrels a day as well. But that was just it really is not that much, which I think is why we saw this big market rally today. What else did I have? Total blip on the radar. Yep. And I think that's why you saw such a surge today. And do we end up breaking this overall trend? Remember, I'm a believer of lower oil prices here, but if OPEC maintains 411,000 new barrels per day and demand exceeds that, well, then price is certainly going to go higher. Exactly. The market thought that OPEC was going to continue to raise production because it seemed that's kind of what they have been doing, is increasing production. Markets thought they were going to increase more. They're not. They're holding. Okay. Therefore, this should most likely move to the upside here. Cryptid? Don't know what cryptid is. So the other piece here was Jerome Powell. So Jerome Powell was speaking, and I can't remember the name of the event was a long one. It was like, it was I'm trying to remember off the top of my head. It's a tough one to remember. It was the Federal Reserve Board of Governors International Finance and Finance Division's 75th anniversary, something like that. And so I thought Jerome Powell may say something about the core PCE price index last week. Might say things about employment, inflation. No. I listened to the whole thing. The whole thing was a butt-kissing job on what a great job these people are doing, the need for this Federal Reserve Board, International Finance Division, and really, patting people on the back. So it was an absolute term, the nothing burger. A big, giant nothing burger there today for Jerome Powell's piece. And I was kind of frustrated because I really wanted him to say something. And, over the next few days, probably tomorrow or Wednesday, because I'm off Thursday, Friday, and I won't do a show Thursday, Friday, I think the discussion and the pressure, not only the rhetoric from the president, but also Scott Bessent may start to increase here a little bit, talking about how the Fed should cut rates. I'm starting to lean that way. And remember, I'm being data-driven. We keep seeing CPI numbers and core PCE numbers showing inflation is fairly under control. Exactly, Big Eb. If he does what he says he's going to do, be data-dependent, then the data is actually showing you that unemployment is staying constant at 4.2, 4.1%. That's great. And inflation is significantly lower. Now, is it one of those, do we wait another month? Maybe. But it's going to happen here soon where we get a change. And I don't think it'll be the next meeting, which is in 2 weeks. Let's bring it up here. But I do think that the next meeting after that you'll probably see, unless data changes. So here is the current probability, 95.3% that we're going to keep it right where it's at the June 18th meeting. When you go to July, though, now all of a sudden the rate starts to look like potential dropping. 23% chance of a 25 basis point cut. If the data continues to stay the way it is, meaning the core PCE numbers, the CPI numbers, the PPI numbers all stay at about 0.1 and show very, very low inflation or zero, and unemployment does not rise between now and July, then I think you'll see a 25 basis point cut. I hate to say it. I was really thinking that inflation would come roaring back here, but the numbers don't lie. And maybe it's modified or skewed simply because of the trade war, what's been going on. But Jerome Powell's going to have to make a pretty interesting decision here. Restaurants are busy in Boston. Everything's busy down here, man. It's crazy. It's everybody's spending. I mean, I went shopping the other day. You go, no matter where you go, my people out here in California are spending. Economy seems to be doing pretty good. I don't see much reservation going on with regards to locking down your money and your resources. I still am keeping some powder dry just in case we do get that recession. I can buy things on the cheap, but yeah, that's where we stand. Earnings have been pretty good. Now, a lot of them are lowering their forecasts, right, because of the trade wars or the tariff war, but maybe that'll get resolved. And, I know that some stuff's escalating here with China a little bit and the U.S. Who knows what Russia's retaliation will be for the attacks on their bombers, which, when you got Putin on a panel talking about nuclear weapons and how their weapons are so much more superior than the United States weapons and how they could move their nuclear weapons around Europe very quickly before we could, that makes you a little nervous. Like, nobody here would ever want to see a nuclear war. None of us. There's always those black swan events that pop up, and let's hope that doesn't happen. Let's hope the black swan is something like just a technical glitch in the markets, not a mushroom cloud. Would be absolutely horrible. Steve says Phoenix people just spend. Yeah, I think Powell will want some clarity on tariffs before taking action. I agree, John. That's the big wild card, and he's mentioned that. He mentioned that several times. That he wants to. He understands that the trade tariff stuff is a big wild card. And maybe we get closure by July. And I agree with you. I think that if that gets definitive closure and the numbers stay the same, then July it is. If not, it'll be sometime before the end of the year for sure. If you look at the December forecast here, it seems to be shifting lower. Right now, there's a 39% chance of a 50 basis point cut, and that's kind of the center forecast, above and below. You guys said Ukraine pulled off a good one over the weekend? Yeah, right. Using a bunch of that actually is a brilliant attack. Although I read it took them 18 months to plan that. Come on, guys, I can plan that out in about 15 minutes. Implement it in a week. Jeez. But yeah, sending trucks with a bunch of drone strikes, that was pretty impressive. I was thinking maybe maybe who knows. Everybody's doing the smart thing, going, "Oh, that's bad. You shouldn't have done that." Oh, that's bad. You don't want to get your nose in the middle of that one, but. Hopefully that doesn't escalate into something much more extreme. I can't imagine Russia just kind of taking that one and saying, "Oh yeah, you got us." I think that they're going to come back full force. So let's knock on wood, hope it doesn't. When's the 90-day reprieve? Is it July 1st? I think it's July. I bet you could sell the word. Yeah. Everybody needs to use drones, man. Everybody needs to use drones. The pager one was crazy. That one really was thanks, Big M. July 9th. That's right. July 9th is that 90-day freeze. The pager one was really scary. And that should make everybody here worried about using these devices. Technology, the ability for them to listen, spy, let alone blow up your phones. That's just absolutely crazy. All right. I did not plan to go on for an hour today, but here we are. Let me run through real quick our markets to see what happened. Jim, I'm not going to get to crypto today because I just don't have time, but we'll talk about crypto tomorrow. Dollar index. Doing what I anticipated doing, which is drop lower. It's headed down towards that demand zone. I think you're probably going to see it go into that zone again. Probably hesitate a little bit before going lower, but that just the trend is your friend till the bend at the end. So dollar going lower, that should be good for our equity markets. Bitcoin, it was looking okay over the weekend. It actually came much deeper into the zone. The futures side of things don't tell the true story, which is why if you're a crypto person, you should not use the futures market. If you look here at the spot price, we actually came down into that zone. Our low price over the weekend was 103, 127, and I have as my low point here 102 on the spot price up to 103 and a half. So hopefully we'll hold this level and start to move higher from there, but that's the extent of your Bitcoin talk for today right there. Moving on up the list here, we go to the Russell 2000. Nothing to speak of. Trend is your friend. Still, that blue line is holding, and price looks like it's going lower and lower and lower. Even though we had some nice strength middle of last week, looks like we're just kind of hesitating there and still following that blue line. Same thing with S&P. I got way too many lines on here. Let me get rid of some of this stuff. I want to keep the 6,000 mark because I think that one's very relevant. I'll get rid of this middle line here and leave those. S&P, I don't really see anything that's that standout with regards to price. So to me, it's just playing smaller intraday swings. That's why I tried to day trade it today. Unfortunately, that one bit me and I lost on that, but we'll hopefully make up for it tomorrow. NASDAQ 100. This is just, again, sideways consolidation. You can see we really haven't had a close above that 21,558 level. Today was good. I mean, today had a nice big rally, 0.74%. We'll see if we get some momentum there and push that through to the upside. And then podium time, your 10-year yield bounced right off that little trend line we have drawn in there. It was a 0.1%, 4.44%, what you can get for your 10-year right now. Moved on to commodities. Money flowed out of that. That weak dollar certainly helping out there. You had gold up to 2.47%. Looking great. That 3,270 mark did hold. Now, to me, it's about going back towards that blue line at the top, which is 3,545, which would mark. Wait, hold on. Let me see really quick why you had that line on there. I thought that was an extension. Yeah, that's a Fibonacci extension. So that was an extension level, but I think going back to the all-time highs here on your futures will be your next target point, and that's going to be 3,500 for gold. All right, and last one, the king of kings. We already looked at crude oil. You know, that's a tough trade right here because it feels really bullish in the short term, but bearish in the intermediate to long term. Yep, and again, Steve, that's because of the dollar. You look at SLV, back up to 31 and a half today, 31.59. Let's zoom out here just so we can see what's going on with SLV. Hey, you gotta love it. Higher lows are in control, pushing us back towards those highs. Let's see if we can keep on breaking through that and get even higher and higher and higher. All right. That's going to do it for me, everybody. Tomorrow, I guess there's a couple things. One was the discussion on Google. I had Karen asked about Google, what's my thoughts on it. I got a lot of thoughts on Google, honestly. I had a friend this weekend actually ask me about it. She's a bartender, and she's just like, oh, well, I started trading stocks. And you can always tell a bartender. She's like, I've got 3 shares of Google. And I was like, okay, well, you're not going to get hurt too bad. But you might want to be careful with Google just with the roadmap ahead looks pretty precarious. So maybe I'll bring that one up tomorrow for Karen, and maybe we'll do a little bit more crypto. If there's something you guys want me to discuss on tomorrow's show, again, it's for you. Email me. Send it on in at tradermerlin@gmail.com. I did get a request to do a Rate That Trade segment, but that's a ton of work on my part to rate everyone's trades if there's a bunch of them coming in. But maybe we can start to do something similar to that down the road. I don't know. We'll see. But if you guys have suggestions, things you'd like to see, let me know. Email me at tradermerlin@gmail.com or put them down below any of the YouTube videos. Just make sure you don't fall for any of the spammers trying to sell you crypto with these influencers are so great making tons of money. I try to delete them, but man, so many of them pop up almost every single day. That's going to do it for me, everybody. Have a great remainder of your day, and I will see you tomorrow.